Hello, this is Mike Swanson of WallStreetWindow.com, and we're going to do a live stock trading session today. This is Monday, November the 12th. I'm going to wait just a few moments to let people trickle in to the live session. But we've seen some interesting swings in the market. There's no doubt about that. And I'm going to go over a sector that's really collapsing and doing very poorly, and I'm actually profiting from that by betting against stocks in this sector, and the stocks are just tumbling. Now, when I say that, you need to understand, I also have long positions in this market, and I'm not doing this video to tell you that the stock market is going to have an instant crash or in some certain date the world's going to end and this is all going to crash overnight or something like that. But we're in a market in which it's much different now than it was before October the 1st. Things basically changed overnight with the way individual stocks are trading now. And we have to, if we want to make money in the market, we have to adapt and adjust to that reality. Now, a lot of people really don't want to do that. And there's a lot of people out there just predicting or making statements that nothing has changed. Everything's just going to go up and up and up and up. So one of the common things I heard in October was we're going to have an election rally. Once the election is over, everything's just going to take off and go up into the end of the year. And then the theme has also been that stock buybacks are going to make stocks continue to go up. But one thing that has happened, and I've seen this in the past couple of weeks, is I've seen stocks announce buyback boosts and their shares would drop on that day anyway. And the biggest stocks with the biggest buyback programs is, we'll look at them in a few minutes, they're trading down for the month already. So buybacks in themselves, yeah, they can make stocks go up, but in the end, all these ideas, all the election rally, or these earnings are just going to explode. In the end, it's the market trends that matter in the charts, and when stocks are trading below their 200-day moving average, it's very difficult to make money in them. Now, that said, I have stocks that I own actually that are below the 200-day moving averages because I do believe they're good long-term investments. However, I know that by having my money in them that I risk losses in them. But personally, I balance that out by also having short positions and actually quite a bit of some good cash positions too. But let's look at the markets. I'm going to actually first, before we look at the charts, I'm just going to make one comment, and I think you should be able to see this blog post that I did last Wednesday. After the election, remember, so many people are predicting an election rally. Well, the very next day, the market was gapping up after the election. And I put out this post before the open saying, be very wary of the stock market election move, because I saw the stock market gapping up. And I was hoping that this email would caution people for just blindly buying into the gap up because all these people were predicting this. And I was scared that what basically was going to happen was so many people were sitting there waiting to play this election rally that they would just get trapped by any move up. And that's basically what happened, because the stock market is now below where it was on Wednesday's open. But I got to tell you, I got a lot of angry emails on Wednesday afternoon because the Dow did go higher off of the open and finished up over 500 points. I think the gap up was like 200. So these people were attacking me in a couple emails saying, what are you doing? The market's going up. You're wrong. And now look at things. And I'm not saying this to say I'm right and everyone's wrong, but to say this is more evidence that it's the charts and the large trends that matter. And when we look at what the stock market has done, and here's the chart of the S&P 500, we're back below the 200-day moving average. And if things are really going to get bullish in the market, we'll consolidate here and break out through last week's high. And then those people that were attacking me in these emails will be proven correct. Their assumption that we'll rally into the end of the year will be proven correct. And I'm willing to adjust my trading positions if that happens. But I got to tell you, I'm very skeptical of that idea. Now, I don't think we're going straight down. I don't think we're about to crash or anything like that, this month. And I actually don't think, for the positions I got, I'm not really that concerned about is the S&P going to go up or down or whatever, because it's what individual stocks are doing that is most interesting to me and where I'm finding the trades that are working. And what's really going on, regardless of if this S&P were to bottom out tomorrow and trade sideways at the end of the month and then break out or roll over or whatever, the reality is there's lots and lots and lots and lots and lots of stocks that are just falling. And I think they're going to continue to fall into the end of the year, no matter what this S&P 500 does. And what I'm going to do in the next couple of minutes is show you why I believe that. And it's not a belief based on, it's just what I see happen. It's what the charts are telling me. So first of all, one simple indicator to look at is the percentage of stocks above their 200-day moving average. And it had a violent breakdown in October. This is the percentage of stocks above their 200-day moving average for the New York Stock Exchange. And it did bounce when the stock market had its bounce into the election, but it didn't get above the previous high. And what it's telling us is that 60% of the stocks in the trading on the New York Stock Exchange, or over 60%, are below their 200-day moving averages. And that's not a good thing. When you own stocks below their 200-day moving averages, you have to accept the possibility that more losses can come. And if you want to trade the market and trade individual stocks in an environment like that, it's easier to do so by betting against stocks that are bad. I'm not saying bet against all stocks in the market at all, but they're bad stocks. And these bad stocks, you can find more bad stocks falling easier than you can find good stocks going up. It's as simple as that. And let's next, I want to show you a really bad sector. But first, let's just look at the charts of stocks inside the Nasdaq 100 and just see what they look like. So I'm going to go back to TC 2000. And here's the S&P 500. Now, I'm going to pull up the Nasdaq 100. And I'm just going to rank the stocks by volume, not necessarily going to go through all 100 stocks. But these are the heaviest volume. We're going through the stocks by how much trading volume they're doing today. Apple is at the top of the list. Now, Apple reported earnings the other week, and it gapped down on that news, and now it's already trading below its recent lows. Apple is one of the most widely stocks in the market. This does not look like a bullish chart. It's making, a 90-day new low already. It's below the last recent low, and it's doing this on earnings. It's doing it on high volume. Well, let's look at the next chart, Micron. It's also trending down, way below the 200-day moving average, which is at 50. Sirius Radio below the 200-day moving average. Microsoft is so far the strongest stock that we've looked at, but what does that stock look like it's going to do? Most likely, just looking at that chart, it looks like a stock that's going to trade between 100 and the high of September not really do anything. So if the stock market was in a position to rally into the end of the year and have some massive post-election rally, we would be finding charts right now breaking out or at least trading near their 52-week highs. We're finding the opposite. Here's a stock that's just collapsed over the past couple of days, Qualcomm. Here's Intel, which has been lagging the market, the S&P, since June. It's below the turn-day moving average, way below its highs of the summer. Here's NVIDIA, which is having an awful rollover and is close to touching its lows of October. And it's way below the turn-day moving average. This is one of the most popularly owned stocks for the past 2 years. Here's Cisco, which is actually one of the stronger stocks. This is the stock that's closest to the 52-week highs. But I believe the reason that is, or one of the reasons, maybe the main reason, is because it's in the Dow, and the Dow is acting stronger than the S&P and the Nasdaq, which is causing some people to trade that, the diamonds and stuff, and that helps stocks like Cisco. Here's the stock actually up today, first one we've seen so far, but it's a disaster. Here's Facebook, which is a complete disaster. And Facebook had a violent gap down in July on earnings. This was the stock that was supposed to always go up and be invincible, and it's just fading away. It's terrible. But what that July gap down showed us, and it was like a over 20% gap down, was if Facebook can gap down, any stock can gap down. And we have been seeing stocks gap down. Here's Netflix trading terrible. Here's the first stock, which is actually up for the month that we've seen out of the 12 so far. Here's Applied Materials, American Airlines doing better. Starbucks. Finally, we got a stock on a high, Starbucks. And there are a few stocks on highs. Don't get me wrong, but as a whole, and I'll show you a strong sector before the weak sector, but finally, a stock on a high. Here's Activision, though, that's collapsed after we just found that great stock. And here's another one below 200-day moving average. Here's another one below the 200-day moving average. Here's one just on the 52-week low. Here's one that's collapsed. Here's one eBay that's just falling and falling. Here's Tesla, which is hanging up, but it's such a bizarre stock of a giant short position that it's prone to short squeezes. I wouldn't take that seriously. Here's Amazon, which is today trading below the 200-day moving average. Here's one stock, finally, second stock that's near a summer high. So let's say we have 2 or 3 strong stocks out of 24. Skyworks, total crash over the past couple of days. Western Digital trading terrible. You get the idea. We've already gone through here's another one. I mean, we can just go on and on. Take-Two was acting strong, but now it's already below the lows of October and September. Electronic Arts, complete collapse. Broadcom trending down. Mylan below 200-day moving average. Here, 3, 4 stocks. Now there's one near a high. Fox. Okay, so when we look at the Nasdaq, we've gone through a third of them, and you get the point. And that is, when we look inside the Nasdaq, there's no evidence that there's enough stocks inside the Nasdaq in a position to go up and rally to new highs and beyond. Therefore, we cannot expect the Nasdaq to do that by the end of the year. I know people still predict, seasonality, but those same people were saying that the stock market was going to rally after the election. It rallied for one day. We look at the stocks. We see what the stocks are telling us about what's happening inside the averages. It is not enough to just look at the stock market averages and be able to come to a meaningful conclusion. You have to look at what the stocks inside the averages are doing. Even, indicators such as the advanced decline line, percentage of stocks above the 200-day moving average, they're helpful, but even them doing that is not necessarily enough. You have to look at what the individual stocks are doing. So, okay, we know the Nasdaq looks terrible. The Dow is acting stronger than the Nasdaq, and there are pockets of strength. And I'm just going to quickly show you some of those pockets of strength, and then we're going to look at the sector that is basically a disaster unfolding. So if we look at the Dow and the stocks inside of it, I just know what they are. McDonald's on a new high. Philip Morris isn't doing good today, but McDonald's is basically on a new high. Johnson Johnson has rallied well. Um, Procter and Gamble has rallied well. Um, Utility stocks are doing well. One I know about is Dominion Resources. This isn't a stock on a 52-week high, but it's traded up since the beginning of October. So where you see the real pockets of strength inside the stock market at the moment are what are called defensive sectors. These are sectors that are considered to be immune, basically, to recessions. People aren't going to stop using electricity. People are not going to stop eating at McDonald's. If anything, they're going to be more people eating at McDonald's because the food's so cheap there. And people aren't going to stop taking prescription medication. So these sectors, I'm not predicting a recession. I'm just telling you what's happening in the stock market. I'm telling you that money is flowing into defensive sectors and exiting technology stocks and the stock market as a whole. That's what's going on. Now, I'm short a stock, to give you an example of what individual stocks are doing. I'm short this stock here called Golden Entertainment. And it's a gambling casino stock. And I'm not telling you to short it because it crashed already for an 18% drop on Friday. Now, the sector of casinos is a disaster. So here's Wynn Resorts. It's just falling. During the summer, I was short Caesars. I'm not short Caesars at the moment. I wish I was, because it's also in collapse. But what is going on with these stocks, you should understand, because there's an opportunity in this sector to bet against them because they just tumble. Now, casinos have massive debt loads. They issue billions of dollars worth of junk bond debts to build all those casinos, to operate them. If you've ever been to Las Vegas, you can tell, goodness gracious, these things cost so much money to construct. Now, the Caesars company went bankrupt a couple years ago because these costs are sky high. And what they did was they came out of bankruptcy and they reorganized themselves into two divisions. One division is a real estate division that actually owns the casino buildings. The second, and it pays a dividend. The second division is this stock, CZR, Caesar Entertainment Corporation. Now, it operates the casinos. But what they did during the reorganization is they transferred much of the debt onto the balance sheet of this stock, CZR, and got it off of the real estate company. And I was short this stock in July, and they came out with news that the occupancy rates in the hotels in Las Vegas on the Strip were down one of the months of that quarter they're reporting on. I think it was June, but it might be the May quarter. But whatever the case, they said the occupancy rates are just dropped terrible, and the stock collapsed on that news. Let's see how much it was down that. Well, it fell from 1150 to a low of 855. The stock fell on over 250 million shares of volume. So much selling hit the stock on that day that it had to be halted for trading 3 times by the stock exchange because it was a complete disaster of trading, a panic to get out. And when you are short a stock or buy or own puts on a stock and it crashes like that, the profits are tremendous. And it was a fun trade to see happen. Now, for me, it wasn't fun for people long the stock. There's no doubt about it. But what was critical for now, this is July. What about now? What was critical was that on the earnings call, the Caesars CEO management team said the low occupancy rates on the Strip. What they did was it caused the casinos to lower their prices on their hotel rates. It means they're making less money. In Las Vegas, really is dependent on entertainment in the hotel rates and so forth, and not as much as you would think on the slot machine gambling and the gambling addicts and all this kind of stuff. In fact, the number one, Caesars owns casinos across the country, and the casino that has the most gambling money made in it isn't even in Las Vegas. It's in North Carolina. But what they said during the conference call was, look, this is temporary. They said this bad month happened because there was less events, less conferences, less sporting events this month, and they predicted a pickup in business would occur in the fall. Well, this company came out, which I'm short, still short, was short before Friday, by the way, shorted this in October. Not planning on getting out anytime soon. That's not, I say that not to tell you to short it because it already fell. This isn't a good entry point. But Golden Entertainment owns the Stratosphere Casino on the Strip. And they came out on Friday and reported a disastrous earnings report. They said our occupancy rates are down, just like Caesar said in July. And then they even said the occupancy rate for the other competitors on the Strip, they're down too. They're lowering their hotel rates again. But then they said something that Caesars did not say in July, and that is they don't know when it's going to pick up again. Now, they did say the future, looks bright, that the Oakland Raiders are going to move to Las Vegas, and Las Vegas is a great, place for sports and events. And again, the Raiders are going to move to Las Vegas. But look, the Raiders aren't moving to Las Vegas for a couple years, and they're talking just the future, right? And an undefinable future, because they said on the conference call that they do not know when things are going to pick up. Let me repeat that. They do not know when things are going to pick up. So the casinos are set now. They've admitted they're going to make less money going forward. And these are companies with massive debt loads. So when they make less revenue, their balance sheets come under pressure. People who own the stock get scared, who understand these things. And they're the people that drive real stock movements. It's not, people just chasing price action that really determine the long-term trends of these things. Its fundamentals do matter in the long run. And so Golden Entertainment got smashed, or an 18% drop. Now, other casino stocks are in this situation too. And this morning, I've released a report to my private trading group, the Power Investor Group, with 5 stocks in it that I'm short, but they also have what I think are good entry points at the moment to take positions. They haven't already crashed. And if you want to get this report and also get into my Power Investor Group, I've structured a great offer to take advantage of these stocks dropping in the stock market. And if you go to your website browser and type in Target POSstocks.com, it'll take you to a course I've created about how to find stocks like this, the scans I use to find stocks like this, strategies, how to enter trades, and if you don't know anything about short selling, how that works, how you can use puts to do trades like this. It's an entire course on betting against individual stocks. Part of what it does is my favorite buying pattern is the twofold formula buying pattern. I'm sure if you're familiar with me, you've heard me talk about that. I basically take that pattern upside down to find the bad stocks to bet against and entry points. So offers like this, if you get on webinars of people, you'll see them pitch you for something for like $2,000. This is like $110, something like that, around 108, 110, something like that. So you get this course, you'll get my report that I just released this morning, a few hours ago, with 5 stocks right now that I am short, because I put my money where my mouth is on these trades, and I think they got good entry points. And I don't really care what the S&P 500 does. I don't think it's going to crash this month. And actually, I think it could easily find footholding before this week's over and bounce into Thanksgiving. But I'm not going to bet on that. But I think that's what's going to happen. I'm more interested right now in these kind of stock trades. This is what's working. This is where I'm making money. I got long positions too. The way I handle my money is I'll take a portion for one type of trading, which is some long-term investing I got, and then I got some money portioned out for doing trades like this, betting against individual stocks. I don't always do that, but now is the time because of what's happening. Stocks are falling, every day. Actually, I'm kind of curious. Let's just look. What is good? What is actually going up the most today and down the most? I like to look at this every single day. Actually, that's interesting. That Dominion Resources is number 6 in the top gaining stocks. This minute, the state is 15 minutes delayed, but it's the 6th best performing stock in the whole S&P 500. Isn't that interesting? Clorox, I think we could also say is this is a utility stock too. Clorox is a defensive type stock. People aren't going to stop buying Clorox products no matter what the stock market does, right? What are the worst performing stocks? Ooh, that's scary. That's scary. Advanced Micro. NVIDIA. Isn't that interesting? NVIDIA is the 5th worst performing stock in the market, down 7% now. It's falling since we've been doing this to talk together. Total collapse. Twitter collapsing. Look at that. Goldman Sachs just dumping. Anyway, just out of curious. I like to. I was trying to show you the charts. I didn't turn it on. Sorry about that. But let me flip the charts back so you can see what I was looking at, because it is kind of interesting. Once you see the best performing stocks, so there's that Dominion that we talked about before, up today, and I don't know what this some other utility stock is the 2nd best performing stock in the S&P. Another utility stock. So it's utility stocks going up today, and so forth. And here's NVIDIA, the 6th worst performing stock today. Here's Advanced Micro, and collapse. It was that Goldman Sachs chart, though, that really, I was like, whoa, look at that. It's crazy. I mean, it rallied into the election and just collapsed. That election rally really is a terrible trap. But the problem was everyone was talking about it, so the market rallied into the election. When everyone's talking about something, that's when you got to be wary in the financial markets. But about betting against stocks, not everyone's talking about doing that yet. But so there we go. But anyway, go to Target POS stocks and get in my group. You'll get the course. You'll get in my trading group. You'll get my special report. You also get the 7-position portfolio that I have with Robinhood, and really keep track of all the time with people. And just be, these are interesting markets, interesting times. In one sense, forget about the up or down direction, but when stock market volatility increases, which it obviously has done, that creates opportunities for trading and big moves in stocks in one direction or the other, as we saw with Golden Entertainment on Friday, as we saw with NVIDIA and Goldman Sachs today too. So anyway, it was good talking with you. And if you got any questions, drop me an email, and hopefully I'll see you in my private group. And then you'll get my training alerts.